Your credit score is sitting in the 500s. And someone just handed you a piece of plastic that requires you to pay before you can spend. Welcome to the world of secured cards, where you fund your own line of credit, like a bank that doesn't trust itself. It sounds absurd, almost poetic in its irony, but millions of Americans are using exactly this tool right now to claw their way back into the financial system. Let's set the stage. Roughly 100 million Americans carry subprime or thin credit files, meaning nearly 1 in 3 adults is essentially invisible or radioactive to traditional lenders. That's not a fringe problem, that's a structural failure wearing a business casual outfit. So how did we get here? And more importantly, why does a secured card or a credit builder loan even exist as a solution? Think of it like a gym membership for your credit history. You're not actually getting stronger by paying the fee, you're getting stronger by showing up consistently, and the bureaus are watching every single rep. The promise was always seductive. Use these tools for 6 to 12 months and watch your score climb like a vine up a wall. But the reality is messier. Many borrowers sign up, get excited, and then discover that a $50 secured deposit with a $300 limit barely whispers to the scoring algorithms. Experts like John Olsheimer, a former FICO insider, have been clear that payment history and utilization are the 2 heaviest levers in your score, and both tools directly target those levers. That's not marketing, that's math. But here's the catch. The math only works if your behavior is surgical, and most people aren't surgeons. We've seen this cycle before. The late 90s brought us prepaid cards being sold as credit builders, and people bought in hard only to realize prepaid activity reports to exactly nobody at the bureaus. History has a dry sense of humor, and the credit industry has been telling the same jokes with different packaging for decades. The misconception worth dismantling right now is that these products are scams. They're not scams, but they are unforgiving tools that punish misuse with the same enthusiasm they reward discipline. A secured card held at under 10% utilization, paid in full, monthly, reported to all 3 bureaus, genuinely can move a score 40 to 100 points in under a year, and that is not a small number when you're sitting at 550. Credit builder loans operate on an almost beautiful backwards logic. You make the payments first, and you receive the money at the end, which means the bank holds your money hostage while you prove you're trustworthy enough to have it. It's the financial equivalent of proving you can swim before they hand you the water. The actionable lesson history keeps handing us is this. Treat the secured card like a utility bill, not a credit line charge. 1 recurring small subscription, automate the payment, and forget it exists until your score notifies you. Moderate, boring, robotic consistency is the strategy. And the moment you start chasing purchases or carrying balances, you've just turned your ladder into a slide. The behavioral trap that kills most credit building journeys isn't laziness, it's optimism without structure, the feeling that because you made 3 on-time payments, you've earned the right to carry a balance. Discipline here means sizing your charges to what you can pay in full, every single month, without negotiation or exception. Philosophically, what we're really talking about is the long game. In a world that sells shortcuts, the person who treats a $300 secured card with the same seriousness as a mortgage is the person who eventually gets the SAL. Mortgage. Consistency isn't glamorous, but compound credibility works exactly like compound interest. And honestly, there's something freeing about accepting that your score won't transform overnight, because that acceptance is what keeps you from making emotional decisions that set you back 6 months. You can be comfortable with a slow climb as long as you trust the process and protect your position by never missing a payment. The irony of credit building is that the people who need it most are the ones who can least afford the fees and minimum deposits that come with entry-level secured products. And yet, with careful selection of no-fee options like the Discover It Secured or the Self-Credit Builder loan, the barrier shrinks considerably. The system isn't designed for you, but has enough cracks that a patient, informed borrower can absolutely work through them. So yes, secured cards and credit builder loans do move the needle, but only when wielded with the precision of someone who understands that the score is just a reflection of behavior, not a reward for trying. The tool doesn't build credit, your habits do, and the tool is just the stage where those habits perform. When you're ready to take that improved credit score and put it to work in the real world, whether through real estate investing, home contracting projects, or finding the right lenders to back your next move, check out our links in the description below.